All right, everyone. Today is Monday, April 3rd, 2023. I am on my lunch break and have about 30 minutes before the market closes. So let's go ahead and do our buy-ins into the monthly investing adventure. So for the month of March, the portfolio did really well. It ended up at about 255. So we had invested $250 at the beginning of the month, and by the end of the month, it went up $5. Now that may not seem like a whole lot, but when I show you what that means on an annual basis, you'll see that that's quite remarkable. So March was just a really strong month for the market, but I'll get to that bit. For now, what I want to talk about is what we're going to do now. So like I said in the first video, we will be contributing $250 a month going forward and just buying into the allocation. So as you can see from the balance, we're actually sitting at 506.78. And if I go to my activities and orders, you can see that there was a transfer of $250 at the beginning of the month into the account. So that just adds to the balance. So let's go back to position and see where we are. Right now, the NASDAQ is down for the day, but everything else is up, so that's pretty good. Let me switch to my other view where I'm tracking this on a spreadsheet and show you what I'm looking at. I'll zoom in a little bit here and kind of walk you through this and my intention for this sheet. All right. So what I did here was that I basically kept a 24-month forecast of what the portfolio should be with the monthly $250 contribution. So you can see that in March, we began with $250, and based on the returns that we are expected to get, it should have added about $2 to the account, but we ended up at almost $256. So I have here the forecasted and based on the historical performance of this allocation. And then what's going to happen is that every month I'm going to fill in the actual ending amount, and we'll see how we do compared to the forecast. So for this particular portfolio allocation, the forecasted return is 9.39% over the past like 20 years. I did this on Portfolio Visualizer and just plugged in this asset allocation right here, and it came back with 9.39%. So this is what I'm using to forecast my expected return. And then the actual return on an annualized basis, based on just March alone, would be around 28.5%. So that's why I said, March was a great month, even though it only added $5 to the account. The one thing that I should note is that I did tweak this asset allocation just a tad from when we began, but I think this is what we're going to keep to going forward. And I'll tell you why I did this. I gave it some thought, and when I first started out, it was pretty much 30, 30, 30, and then 10. So 30% in large cap growth as represented by the NASDAQ 100, 30% in small cap value represented by this Advantage fund, 30% in US government bonds, and then 10% in gold. This would have given us a basically 70-30 portfolio if you were to count gold as equities. It's really not, so it's more like 60, 30, 10. But for all intents and purposes, it was 60% plus an alternative in equities and 30% in bonds. I changed it slightly only because I think that since I'm starting with a very low amount and building this up over time, I'm hoping that some people will be following this and would be younger than I am. So if they are, they should have a little bit less in bonds and be a bit more aggressive because they have the time to make up any losses or market downturns. If you're older, you want a little bit more bonds just to balance things out and preserve what you have. But since we're starting this from brand new, and some people may be following along with this, I decided to just lower the bonds just a tad. So it's not a huge difference. So this is how the asset allocation would currently look. I'm also tracking the portfolio just in real time using the stock features of Excel. So I put in the quantities that we have, which should match what's in Fidelity. So we have 0.257 shares of the NASDAQ 100. And here you can see that we have 0.257 shares. And then it's grabbing the current prices and it's giving me the current value. This SPAX is just the Fidelity government money market fund, so pretty much cash. Let me expand this a little bit so we can see it all. And then down below, I have a table that's going to help me with the buys and the rebalance. So it's the same holdings, just the equities portion, what it should be in terms of allocation, what it currently is in terms of value, and then this is the buy value that we're going to make. The other thing that's a little bit different on this one is that I'm also including a chart that's going to track our actual performance over time compared to the forecasted value. The reason that I want to do this is that I want to make people comfortable with the fact that when you're using a forecasted rate of return, so maybe you ran some back tests and what have you, and you found that, a particular allocation is going to give you, pick a number, 8% a year on average, 9% a year on average, right? That's a straight line growth. But the market in reality doesn't do that. It goes up, it goes down, right? And we can see that in the first month, we earned more than what was forecasted. So over time, as I add actual values to the table, you'll see a dark blue line that will overlay this orange line and will show how we actually did compared to the forecast. What it really means, and the lesson that I hope it teaches, is that in the short term, you can be wildly different from what is being forecasted, either to the upside or the downside. But as we get along in time, it should track the forecast a lot more. And that's the principle of what's called reversion to the mean. So I'm hoping that, at least over the next year or two, we see that, up and down over time, but that it should generally track this orange forecasted line. So that's why I have this. Hopefully you'll find it useful, but what I plan to do is to show this spreadsheet every time I make a buy before we buy it, and then kind of take it from there. So let me get my pen and kind of mark down what we're going to do here, just so that I don't have to flip back and forth. So based on the table I have here for the buys, it says that I should buy $95 worth of QQQ. So I'll put that down, 95. For the Advantis small cap value, I'm going to buy 108. I'm just rounding that up. For the bonds, I'm going to buy $24. And then for whatever is left, I'll put it in gold. It's supposed to be another 24, but let's see if we have that left. So GLDM. All right. Let's go ahead and go back to Fidelity and make our buys. I don't know if I talked about this, but I did make one other change to the actual individual asset that I'm using for small cap value. So I think before I had VIOV, it was a Vanguard S&P 600 small cap value or something like that, or Russell 600, whatever it is, a small cap value from Vanguard, VIOV. And I decided to switch it to this Advantis US small cap value fund, AVUV, primarily because Paul Merriman has a site that gives you like the best in class for each asset class of funds, and he recommends AVUV. I looked at it and I like their approach, so I'm going to use that going forward. So that's maybe the only other change that's in here. So let's flip back to Fidelity and let's start making our buys. All right, so first up, NASDAQ 100. So let's go ahead and buy $95 worth of this. So we're going to buy dollars, 95. We'll buy it at market, preview the order, place. All right, that is done, and I got the notification it's executed. We'll enter a new order. Before I do that, let me get out of this. You can see that we're buying more of the AVUV, the small cap, because it went down a bit more over this time period than the NASDAQ 100. So you can see that, whereas the current value of the NASDAQ 100 before we made the buy was $82, the small cap value was only $69.42. So as I'm placing my orders into the account each month, I'm using that opportunity to just bring the asset allocation up to balance as much as I can. So for AVUV, we'll put that in. We'll set it to market, buy dollars, and we're going to buy $108 worth of this. Preview it and place it. Next up is government bonds. So I'm going to put in GOVT. We'll buy market dollars, and it's supposed to be $24. Preview, place. All right, so now we've made 3 buys. Before I buy the gold, let me get out of here of the trade screen and just refresh and make sure that we are down to the appropriate cash amount before I make the last buy. So let me click refresh. Okay, you can see that we've made these trades. So that's what the yellow highlighting means within Fidelity, is that there was some kind of activity on the security for the day. So the last one up is the GLDM, the gold mini. So let's go ahead and buy that. I can see that right now I have exactly $24 to trade. So I'm going to buy $24. So market, buy dollars. I'll let Fidelity figure out, buy a little less or whatever, and we'll see where we end up. I get the warning that this is an alternative investment, blah, blah, blah. I'm going to say fine, place it, and it's done. So let's go ahead and review and see what we've done and update our spreadsheet accordingly. Okay, so here we are. Now with QQQ, we ended up with 0.553 of a share, so I'm going to mark that down. For AVUV, the small cap value, we're at 2.376. For government bonds, we're at 4.345. And then for gold, we're at 1.293. And then for the SPACs here, SPACs is just that government money market fund. We started with $250.66 in SPACs, and then we spent $250.63. So we have 3 cents left in SPACs. I'll update that accordingly. So go back to my sheet here. And for the portfolio, I'll just go ahead and fill this in. So NASDAQ 100, we're at 0.553. AVUV, we are at 2.376. Gold mini shares, we are at 1.293. And government bonds, 4.345. And then the SPACs, we ended up with 0.03, so 3 cents. All right, that is pretty much it for the buys for the month into the monthly investing adventure. I'm going a little slowly with this because I'm hoping that I'm getting some new people that are watching that are somewhat beginners and want to figure out how to mechanically go through the process of adding to the position when they add funds to it over time. We didn't quite do that with the $1 million portfolio because all the money was kind of in there, and we were just shifting from cash to our allocation, whereas this actually has new contributions going in at $250 a month. So it mimics, if you were starting a brand new account, you're transferring in money. So at $250 a month, this is going to work out to be, something like, $5,000 a year. Is it less? No, $3,000 a year. So about half of the contribution to an IRA, which is at like $6,500 for the year. But yeah, hopefully you can follow along and see how this all works out. But I'm doing this on Fidelity, and if I were to go to my summary page, we can see that we basically started with 250 all in March, and then we jumped up to 500 in April. And then this is how it breaks down for the asset allocation. The one thing to be aware of is that on this sheet, this asset allocation is a little bit behind because we just made the trades today. So it's really reflecting yesterday's holding. That's why the short term is so high. The other thing to note on this, and it's worth saying, is that when you start investing, or if you have a relatively small account right now, and you're beginning to take it more seriously and add funds, depending on the amount of your portfolio, what happens is that it doesn't matter what the market is doing, right? When you're starting to invest, you will hear things like, oh, the market is at an all-time high. Should I wait a little bit for things to get cheaper to invest? No, you should not. It doesn't matter, because what happens is that market forces will have very little impact on your portfolio when you're first investing. What has a much bigger impact are your contributions. And we can see it in this chart right here, right? We contributed $250 in the first month, and it went up a little bit, $5. But then we added our $250 in month 2, and you can see this huge jump to $500, right? Next month, when we add another $250, it'll be at about $750 plus earnings, so on and so forth. The point is that when you start investing, whatever the market's doing doesn't matter, right? All your contributions make a much bigger difference to your balance. So I'm hoping this helps. I'm hoping you enjoy this, but thanks for watching, and I'll see you next month on the Monthly Investing Adventure. Later.